Hi and welcome to Money9, India's first multilingual personal finance platform. I am Rohit Banerjee. From a daunting March 2020 to a rewarding Feb 2021, the market has swung between the extremes. Propelled by the euphoria over the union budget, Sensex closed above the 50,000 mark on Wednesday for the first time. To understand this sustainability of the market and also to get an idea what an investor can do with an amount of 1 lakh rupees, we have with us renowned market analyst, Mr. Rajat Bose. So, Mr. Bose, my first question to you, how do you see the market behaving this year? Will this 50,000 level mark sustain?
First of all, I must say one thing. That is, at the end of the year, around say 1st of January or 31st of December, every year people, especially TV anchors, ask us this question: how do you see the next year going forward? But these predictions actually have no value, because hardly people, whoever seen that there would be a COVID pandemic in starting from March 2020, and whoever thought that on March 24th, when 7515 low was formed in the Nifty, that we would close nearly at the double, almost 80% higher from that level. So if you ask me, I would say we are likely to remain bullish so long as the liquidity injection by the central banks of the world continue to happen. This market may not fall very sharply. Even if it does, at some point in time, it will again recover, because once you have money in your pocket, everything looks cheap, everything feels cheap, and you continue to buy. And when that monetary liquidity gets tightened, interest rates go up, central banks do OMO operations to suck the money dry, then you can expect a sustainable correction out here. Otherwise, there will be dips in between, but the bullish overtone is likely to continue.
So, Mr. Bose, for a new investor who wants to invest 1 lakh rupees in the market, what should be his or her strategy at this point of time, especially given the market scenario?
I would suggest somebody with a small sum of money of rupees 1 lakh actually should go through the path of mutual funds. At least that is what the regulator wants. Regulator suggests that those with small money should actually opt for professional services of a mutual fund and invest. Now, that is the regulator's point of view. And suppose if this individual investor you are talking of, our hypothetical individual investor, if he or she wants to invest directly, then I would suggest, first of all, invest for real long term. I actually, in my Twitter handle, the pinned tweet that I use is this: that you have to follow four criteria. First of all, that you are actually buying quality stuff. Secondly, you are buying when the market is down and everybody seems very pessimistic. At that point of time, remember March, end of March or April, around that time, if you have bought now, you are happily moving to the bank to encash whatever money you have got as profits. But when the market is in a rara mode, like the time that we are in at the moment, I do not suggest a new investor coming in. Actually, the new investors always fall prey to this kind of a market. The lure is too good to not to avail. The problem that happens is that everybody is making money. Why don't I? But the point is that you never know when that sharp correction will happen. And if an investor comes with a small amount of money with very low risk tolerance, he or she is more likely to book losses, even if it is a good company. So my suggestion is that you come when the market is actually down in the dumps and people are telling you not to invest. And this is the market where people are saying every day, hey, you are getting 4-5%. Think about it. 4% every day, even on a simple terms, means 25 days and your money is double. That doesn't happen. So my suggestion is wait for some time, choose quality stocks, and buy at better valuations, not at current levels. And uh, of course, the budget has given a fillip, so you should be investing. That is definitely there, but not right now.
Well, the government has also announced mega plans for the infrastructure sector. How bullish you are on infrastructure stocks?
Let me briefly recount my personal story here, because this is one sector that I have always felt that India needs a lot more infrastructure. And government after government always promised that they will actually invest in infrastructure. Infrastructure had its heyday up to 2008, when the stocks were selling at 40p multiple. After that, infrastructure never performed. And I attended an award ceremony there. A person who actually predicted which will be the worst performing sector got a prize, that is infrastructure. So that is the kind of scenario for infrastructure stocks. But this year, yes, the focus is clearly on infrastructure. Again, I would say choose good stocks. Primarily, whenever you talk of infrastructure, you should think about two stocks. One, the major infrastructure company called Larsen and Toubro, and the second is the major banks that can finance such infrastructure project, that is State Bank of India. So these two should be on your radar. Apart from that, I would say you invest in a stock called Dilip Buildcon, because there are so many road projects, and that's a good company from a monthly chart point of view. That means 1 month of market activity is captured in one bar or one candle. That suggests that Dilip Buildcon is on its way to regain its past glory and do very well. So from that perspective, I would say you can think about that. Another stock, Adani Ports, that seems to be in a sustainable uptrend. So maybe you will consider that. So these three from the infrastructure sector I would choose. And apart from that, State Bank of India.
What are the other stocks or the other sectors that are on your radar?
Well, Rohit, I should tell you some statistics. Statistics in the sense, not exact numbers, because I do not have them in front of me at the moment. But if you look at the sectors in which the FIIs have actually invested over the last few months, since November, FIIs have started investing in auto stocks, automotive stocks, and auto components. That is a major area, but their major investment is in the financial sector. That is banks, about up to, I think, January, not January, I think it is the 15th of January. Uh, their investment in banks had been 7,87,000 crores, in the sense that it is the asset under custody. That is the figure that I'm quoting. And rest is financial services, total 13 lakh crores. Apart from that, IT and pharma, these are major sectors. But the emerging sector that is coming up there is auto. Already, I think, 1,45,000 crores. So you should actually follow the leader. FIIs constitute about 13% of the total investments in our market. So that, from that perspective, if you look at it, if you follow the FIIs, they are the market movers. You should follow them. So these are the sectors. I would still say the banking sector should be chosen. I would still say that you should choose automotive stocks. But all these stocks, if you now ask me which auto stock, which banking stock, I have already named a banking stock. But the point is that all these stocks have already moved up considerably. So one should better wait. It is not that is FOMO, that fear of missing out. If you have that fear of missing out, so much the wars. Don't fear that you will miss out. Market gives you a chance, and you will be able to get into these stocks at a lower level. But these stocks will definitely do well. Another point I'm trying to make here is, do not be afraid of big falls happening and all that. I tell you, when the market fell in the month of March, FII is actually notionally losing a huge chunk of money, several lakh crores or several trillions, but they have recovered. And see the kind of market that they have bought from October to January 15th. They have bought huge chunk of stocks, but sold only 5 1,000 crore worth of stocks and the market fell so much, and then again the market recovered. They recovered because the market is a thin market, little bit of buying, and the market shoots up. So you will get opportunity at that point of time, move into these areas. And I would prefer that you, so at the moment, you do not get into pharma, because pharma has been played out, but there is possibility in IT also. You can also look at that, but at lower valuations, not at current levels.
So for the first time investors, what is your recommendation for them? Should they invest in mutual funds or they should go for direct stocks? What's your take on that?
I would suggest a particular mutual fund scheme, and that is a favorite of mine. If anybody asks me these days, I actually tend to recommend that fund. That is the SBI Focus Fund. It has got even international stocks. So internationally great stocks, also Indian top quality stocks are there. If you have a long term horizon, and when I say long term horizon, it is not income tax long term capital gains like 1 year, or even if you say 3 years. No, I would say, like a lot of long term investor, it should be a minimum of 5 years, if not 10 years. My average horizon of holding a good stock is about 7 years. In some cases, I have held stocks for more than 12, 13 years. So if you have such kind of a horizon, India is still an emerging market growth story. You will make money.
Thank you, Mr. Bose, for joining us today. Thank you for watching Money9.